traditional custodians of the land who make today the Wiradjuri people, and pay my respects to elders past, present and emerging. Good morning and welcome to Business Before Hours for April in the school holidays. Miss Christie. I'm Lisa Hasty, General Manager here at Albury Business Connect. I'd quickly like to introduce the team if you haven't met them. We have Tamisha Smith here, who looks after our events and all the logistics that go on behind the scene, and there are a lot to put things like this and other events together. So thank you, Tamisha. She joined in January. And Rebecca Gadd, Business Development Manager. Beck started with us in November, and hit the ground running this year. He's done a great job with our members. So if you've got any specific feedback on membership, ideas or anything, please see Beck or myself. I'll stumble across a few extra words here in a moment. I'd like to welcome board directors today. We have Simone and Kate from PRD. Thank you for being here this morning. And obviously our sponsors. So a big thank you to our family of sponsors. Without them, we can't do what we do. In the room today, I'd like to mention HIB, PRD. I'm worried that I'm now going to miss somebody, but I think that might be it. If anyone else would like to be sponsored, then come and see myself or Beck. A few housekeeping rules. Bathrooms down the corridor to the left. There's a tea coffee station here. And if there happens to be an emergency, we can bash down this banner and run out there and come straight the way that you came in this morning. I'd like to now hand over to our first presenter, Kate from PRD. Thanks, Lisa. To give us a rundown on the property market, which has been booming, but we'll find out more now. Please, Kate.
Hi. Good morning, everyone. My name's Kate. I'm from PRD Real Estate. PRD is Property Research and Development. And we're very fortunate because we have a research arm as part of our real estate industry, and we're the only real estate office or agency in Australia to be able to do that. I'm very fortunate I'm here with the majority of my team this morning. So our other director, Matt Sharp, and you are looking at PRD's Property Management Team of the Year for 2021. Just come back from our annual conference and awards that were held on the Gold Coast last week, and we are extremely fortunate to be able to be awarded the Property Management Team of the Year. So we're very excited. That hasn't actually gone out. That's a bit of a scoop for you all, but we'll be looking forward to telling everyone about that shortly. So thank you again, just a welcome to you all this morning, and welcome to those who are at home watching us as well. I've just got a short video presentation that I wanted to kick off with first this morning. Do you want me to do that? Yep. So one of the hottest things to come out of COVID is obviously what's happened in the real estate industry and how that has positively affected us. I don't think anybody would have realised the impact it was going to have on our markets, particularly obviously for Albury-Wodonga and the increases that we've seen. So this morning we'll just wanted to focus on some of the key indications that's been happening in our market, and I just wanted to refer to the slides during this presentation so that we can just give you a bit of an update on what's happening. So as I said, PRD with our research arm are very fortunate. We get half-yearly reports and we get to see the inside about what's happening in the real estate market. We have these broken down obviously into our LGAs and into the areas of interest. So you can see here the Albury property market update for the first half of 2022. In Q4 2021, Albury recorded a median house price of 500,000 and a median land price of 230. Now, out of interest, I looked back at what our median house price was when I first started working for PRD, and one of the first reports we got in 2015, we were 285,000. So first home buyer affordability is clearly obviously starting to get a bit out of reach for them, which is why you can understand what you're seeing in the media. Annually, this represents over the last Q4 2020 and Q4 2021 a median price growth of 22% for houses and 35% for land. Between that last quarter 2022 and 2021, total sales slowed by negative 20.1%, which you can see is, as we've referred to, that high demand, low stock levels. What was coming on the market was an increase in price, but there was obviously lower stock levels coming on at that time. And you can see here negative 80% for land. Current owners and occupiers can benefit from real returns on capital investment as median price growth has been fueled by high demand and low stock levels. We'll show you on the next slide, 80.6 million in project developments is scheduled for the first half of 2022 in Albury, with a large focus on infrastructure and commercial projects. In the 12 months to Q4 2021, the median house price for rentals increased by 14.9% to reach $425 a week. I did look back as well, back in 2015 when we first started, that was $300 a week. The average days to let on market remain at 18 days, and a strong increase in rental prices and the house yield generally on par with the LGA of Albury at 4.4%. So we've been very, very fortunate to remain a resilient rental market in Albury. In December 2021, Albury recorded a vacancy rate of 0.7%, slightly above that of the Albury LGA, but well below Sydney Metro. Vacancy rates in Albury has trended below 1% for the past 18 months, remaining well below the Real Estate Institute of Australia's healthy benchmark of 3%. Continuous low vacancy rates confirm there is a healthy level of rental demand, and investors can be confident of conducive investment environment. As I referred to before, our future developments are very much angled at infrastructure, commercial and industrial. So the main infrastructure project for the first half of 2022 is the Albury Base Hospital Emergency Department, total of 29.3 million. The project is set to redevelop the emergency department at the existing Albury Base Hospital in stages 1 and 2. Out of that, a total of 2.4 million worth of residential project is set to be constructed around our area, which includes some land developments at Pastoral Lane and Claywana Road, and then at the Hume Country Retirement Resort as well. You'll probably see, I think there's another residential development released in the paper yesterday, in the corner of Hume and Olive Street as well. So no doubt that residential component of the graph will start to increase, as well as we're doing more metropolitan type developments. Interestingly enough, this is where Wodonga's really kind of come in to shine. Q4 2021 for Wodonga recorded a median house price of 480,000 and a median land price of 200,000, which represented over that 12-month period a median growth of 23.4% for houses, which was quite huge for their market, which we'll see in the next couple of points. And that was a 33.8% increase for land. Between that annual rate, the total sales slowed again by 1.7. So they didn't have as differential stock in their market. They seem to have the same volume, but again, capital growth has largely been driven by low supply levels that is underserving a higher demand, creating more room for developers to enter the market. Similarly, Wodonga has got $64.4 million worth of project development, which I'll show you on the next slide, that's scheduled for the first half of 2022. And again, having a large focus on infrastructure, but a lot of residential projects for them as well. In the 12 months to Q4 2021, the median house price for rentals increased by 13.2% to reach $430 a week. So again, quite similar to Albury, showing that consistency across both markets. And the average days to let were 19 days. A strong increase in rental prices and house yield above the Wodonga LGA suggests Wodonga again remains a resilient rental market, much like Albury. In December 2021, Wodonga reached a vacancy rate of 0.5%, below that of the Wodonga LGA, and again below that of the Melbourne Metro. Vacancy rates in Wodonga remain well below the Real Estate Institute's healthy benchmark, which is great. Vacancy rates have trended on or below 0.5% for the past 18 months. So there's a really healthy level of rental demand, and investors can be confident of a conducive investment environment. As I mentioned, for Wodonga, for their future development, a lot of it's based on infrastructure and residential. The main infrastructure project, again, putting it into health, being the Albury-Wodonga Health Emergency Department and short stay, $36 million making up that 47.9. That will create separate portions of the emergency department expansion. A total of 16.4% for residential project is planned. Now, a lot of that's around the Boyce Road residential subdivision and the rural housing network in Rattway Avenue for their units as well. The creation of a large number of vacant lots is encouraging as first home buyers can tap into multiple government grants and build their home. However, this takes time. The market needs to ready to sell stock. Now is the time for developers to enter the market. We've been quite fortunate. We've actually just released this roaring regional report that actually just came out on the 7th of April, so very new to the market. Extraordinary levels of median price growth joined with low vacancy rates have resulted in Wodonga being named as one of the top 10 most affordable regional areas in Australia. Wodonga and Albury, respectively, in their states, are the fastest growing regional cities, which I don't think is any surprise to either of us. As I said, Wodonga has been named in this report as the most affordable regional area in Australia, and the latest research released from PRD that includes Greater Bendigo, Northern Grampians, Wagga, Griffith City, Upper Hunter, Central Highlands, Whitsundays, Mackay and Toowoomba. A copy of these reports will also go out to you after today's business before hours as well, and we'll send out an email so that you've got a copy of those and can have a read. We've measured up the last 10 years in terms of our market growth overview, and looking at that, the Albury City LGA has experienced a significant level of price growth in its housing market, up by 57.9%. In addition, vacant land and unit median house price growth has been in 2012 to 2021 was 41.7% and 36.7% respectively. Again, indicating that we've got strong property market as a whole. There were 1,302 house sales in the Albury LGA in 2021, representing 84.4% growth in the past decade and 15.4% in the last 12 months, which, as we can see every weekend with the results that we're achieving, is huge for our market. For Wodonga specifically, this is where, as I said, that extraordinary price level of growth in its housing market up to 73.1%. That's phenomenal. In addition, vacant land and unit price growth between that 10 years was 56.7% and 52.3% respectively. Again, they're down a little bit on their volume with 903 houses for sale in the Wodonga City LGA, but still 83% growth in the past decade and 20% in the last 12 months. Another report that we have just released is, again, the affordable regional town. So a lot of PRD's research is looking and based around its regional developments and its regional towns specifically, obviously, where they've got PRD offices. Asti is our senior chief economist, and she has been in this report talking about how the property market has fared in the wake of the pandemic. Obviously, seeing that there's been an increasing trend of people from cities buying a business and moving to regions for a plethora of reasons, really, but most significantly, employment and financial security. It's just that we have far more affordable markets compared to what we would be receiving in Melbourne or Sydney. The housing market in the regions is rapidly improving due to the fact that regional median prices are 50% less than those in their major cities. So despite our markets still increasing, we are still seeing that we are more affordable than Canberra, Sydney and Melbourne. According to 2021's PRD's report, the following 10 regional towns and cities were identified as a standout affordable regional area with solid fundamentals for sustainable future growth. Noting here that Greater Hume is obviously listed along with Federation, Port Stephens, Greater Bendigo, Geelong, Warrnambool, Circular Head, Whitsundays, Mackay and Toowoomba. And again, a copy of these reports will be going out to you later today. We've had a graph that looks at the regional asset versus regional value. Seeing here, obviously, what we've discussed this morning is that median house price over that last 10 years and the percentage of growth, along with Albury and Wodonga at the top of the chart there, and then rental prices on the other side as well. So as you can see, we're still remaining quite consistent with growth between the two property markets as well as on the rental side as well. Interestingly enough, that some of the other towns that are on the report, Tumbarumba's there, Gundagai's there, still other regional towns located close to Albury still performing very well considering the pandemic, which is great. So as I said, a copy of our information will be going out to you this morning. We just wanted to give you the chance to see what's happening in our market, what's happening in Wodonga. Obviously, we're seeing extraordinary prices being achieved over the weekends as auction results come in and property prices. And I'm sure, you know, everybody's talking to friends or family saying they've got some gripe about the property market because they either can't get in due to affordability or they've just exited due to the fact that they either can't purchase or have purchased, which is really lucky for them. But if there's any questions, more than happy to help. But otherwise, thank you very much.
Got any questions for? Oh, sorry.
I'm just going to be let off the
I'm just curious as to what the median rental price in Wodonga is actually higher than the median rental price here in Albury.
Yeah, just slightly. Yeah, Wodonga's, like I said, both markets have gone nuts in the affordability. What we are seeing is there's no decline in the quality of the applications that we're seeing either. Usually there is slides, but at the moment everybody is still highly qualified, highly affordable to meet these property demands. But yeah, just with the increase, and as I said, for Albury starting at 300 a week and now being mid-4s from 7 years ago, it's a huge increase. That's again comes down to affordability as well. Yeah. Hello. Oh, hang on, sorry.
Oh, thanks. It seems like with the rental market, this is like 0.5% vacancy.
Yeah.
And the healthy index is 3. I mean, it's very healthy for investors. It doesn't seem very healthy for renters.
Yeah. So obviously investors are doing very well at the moment and they're kind of in the driving seat, I suppose. What we are seeing is the rental increase. Some tenants are getting very disgruntled by their rental increases because where they were paying and obviously where the market's falling now is seeing quite large increases as well. What would have been $5 or $10 12 months, 2 years ago could be 40, 50, up to $90 now for some of them.
I've heard stories of hundreds going up. The investor buys a property and the tenants get $100 plus.
Yeah, and the unfortunate part about that is because there is such a shortage and because we are still having quality applications, there are people out there who can afford to pay that, as opposed to the people that are obviously either getting their prices increased and having to vacate because they can't. It is unfortunately a bit of a winning situation for investors, not so much the tenant. Mel?
Do you see it slowing down?
No, well, this is my personal opinion from what we've experienced and specifically based on our agency. I don't see prices dropping. I see prices remaining quite strong and quite consistent. I think we're going to have to get used to the fact that this is now the new normal. Yeah, correct. I think that in my view, we're going to see a reduction in the competition naturally of how far that price goes over and above what the person is asking, only through natural attrition because either people have purchased and left the market or they've left the market because they can't afford it. So instead of having your pricing remaining strong and then a competition of 5 people going to compete over and above, you might have 2. So you're naturally just obviously reducing how much competition is in the market. But I certainly don't think prices will fall away anytime soon. Tanisha.
What's your advice for hopeful first home buyers?
Good luck. I'll see you on the other side. For first home buyers, unfortunately, what used to be a 250, 285 house that you could afford, 3 years ago, it's just not there, or the quality of what you're buying is not there, unfortunately. So consistency in your employment, obviously, so that you can show your financial, so that you can show your financial stability to your finance companies. I know that they talk about all of the additional expenses that are on your finance, no afterpays, music pays, all that kind of stuff. Like it literally is saving your butts off so that you are trying to get your position to have a good deposit to show your finance company that you can afford it, because at the end of the day, the properties that you're going to be competing for to purchase are going to be obviously that little bit more increase than what they were 3 years ago. And I suppose the hard part about that is you're in a position where you could be going in to buy that house with 4 or 5 others who may just be in a better financial position. So unfortunately, first time buyers just got to keep trying. You just got to keep trying. Talk to your real estate agent. Make sure that they tell you when properties are coming onto the market so that you're first in the know.
Yes, I'll be contacting you.
Yeah. You've just got to work so much harder now to buy a house than what you were a few years ago.
Feel sorry for our kids.
Yeah. Oh, absolutely.
It's also in the cities though, it's been that way for a while, so all like the regions just sort of catching up now because people in the cities, so it's not just first time buyers.
No.
I was going to ask, have you seen any influx of applications or prospective buyers from the cities like Melbourne or Sydney or Brisbane? Or-
And look, when the pandemic first started, that was where the shift was going. Naturally, we were having this view, because the media portrayed it this way, that we were having this huge influx of people from Melbourne and Sydney who could now come and work and live in our region. It was more affordable for them and they were getting the hell out of the cities. For us, our specific office transactions, we looked back and predominantly a lot of ours were local. That was just our experience. We were seeing Albury had money and Albury wanted to buy for the fact that they wanted to retain their properties. They wanted to retain their town, their area, their region, and they didn't want to have, they were a bit kind of scared of this influx of metropolitan people coming into the Albury region. So for us, there was a real high percentage of local people buying local houses, but also in saying that there was a percentage of increased influx from capital cities, but we didn't have a huge volume compared to our total transactions. A few investors, there's more affordable for them to buy, but predominantly ours were local.
Were the local people local investors?
No, local home buyers. Local home buyers, and a lot like really early on, first home buyers, they just went to town to try and get what they could and secure what they could, because that was the best opportunity for them. And at no point did I think we all knew it was going to get us out of control as it was, but that was really noticeable for us in that first part of the pandemic, that first home buyers knew their budget, they had to get in, they were competing, and they just had to get it done at that point. Yeah. Yes, Beck.
Just a quick one. In your experience through the last 2 years, how much change have you seen in lenders' criteria? Have they really tightened up financing?
So from what we can get, because we don't do a great deal on the lending or the financial side, we just with our conversations with purchasers, we just know that they have to jump through so many more hoops than what they would have normally. Yeah, but as I was saying to Tanisha, like they're literally looking at every afterpay, sick pay, credit card, down to the finest detail. How much you're spending on menu log, like it's all of that kind of stuff that they're looking at. The other thing we're finding is people who are coming pre-approved. People are coming pre-approved. The banks are then looking at, so they might have their pre-approval, but then the banks are actually looking, once they've got their property and it's under offer, and they've got to then assess their loan, starting nearly from scratch again. So they might have been pre-approved for that amount, but once you've actually found the property, they'll assess that property as if their purchase is starting from scratch again. So they're just having to jump through more hoops than what they have had to previously. Yeah.
No, that's all right. No worries. Thanks everyone. It's two tails, isn't it? If you're trying to get into the market, or if you're a current homeowner, then you're like, yes, no, this will be it. Congratulations, Kate, Matt, and the team on your award as well. It's amazing. Nick Barr from HIB to talk through all things insurance.
Oh.
Thanks, Nick. That's it.
Now, I don't have a flash video. Wish I did. My name's Nick. I've been at HIB for 14 years. We've got our Managing Director, Michael, here, our Business Manager, Matthew, and our Claims Manager, David. So he's obviously David's flat out, but he does a great job. The presentation today is more about the role of a broker and what we can offer and what to look out for in terms of risk management. So if we agenda for you. So broker's role, benefits of risk management, some growing uninsured risks, underinsurance, and then questions. So
It's lovely when it's a surprise for the presenter as well.
yeah. I like your pressing. So advice relevant to my broker's role is effectively we break it down into three parts. Advice relevant to market, knowing your business and risks and advocacy. So advice relevant to market could be, you could be a specialist engineering company requiring a certain type of cover. You could be a project manager, you could be an electrical engineer, you could be an architect or a real estate agent. So it's really knowing the broker, knowing what your business is and providing advice for that. In terms of risks, that could be clients that are exporting to the United States. That's a real exposure for a lot of insurers, especially if they don't know about it. Clients importing goods directly into the country because they've become the manufacturer by law. So a lot of insurers are not keen on that. If they're directly importing toys or clothes or children's toys or anything like that, because then all of a sudden insurers go, well, that's well outside our risk profile. So it's really knowing what the client's doing, especially if with the growing economy, clients may change their business activities mid-term and we don't know about it. So they've got a project manager, for example, and then all of a sudden they decide to get into electrical engineering or contracting or architecture or something. We don't know about it, and the insurers can't claims on. And we often find out on the cuff of a conversation, we end up saying, hey, how you going? I'm like, oh, I bought this house. Oh, did you? Oh, good. What about the insurance? Oh. And often what we're seeing now is clients are financing a domestic property, the banks aren't asking for a certificate of currency. So whereas before they needed it before settlement, so I've had 3 or 4 in the last 2 months. Whereas it's just been an off the cuff conversation with clients saying, oh, I bought this place, you know, who's the bank? Oh, Combank. Or they ask for a certificate of currency. What's that?
So is that the new bill?
Yeah.
Yeah.
And well, like, oh, the loan settled 2 weeks ago. So obviously they're exposed, they've got a mortgage, they've got a property insurance in case something goes wrong, the bank will want their money. So I've seen that really strange.
I was talking to a lady yesterday, she's got a new bill that's coming across to us for management. She said, oh yeah, they just said they'll give us the keys next week. And I'm like, oh, do you have a final certificate? Do you have your occupation? She's like, what's that?
Yeah,
no, you need to have these in place before the builder can just flip you the keys or that you can put a renter in. And I said, have you got your insurance? Oh, what about that?
Happened with my brother and sister when they finished their house in Sunbury. He rang me and said, oh, we're into a house. I went, are you? Well, was it insured?
Yeah.
It's not.
It's
So, which doesn't surprise me with him, Josh, but again, it's family, knowing your market. We'll have to fix that up at 7 o'clock at night. And in terms of advocacy, mainly the role we come into is claims, because given the volume of natural disasters at the moment, and I think David was on the hold for 45 minutes yesterday trying to get a hold of one of the insurers, dealing directly, you can imagine it's going to be a nightmare for a lot of people, especially if they don't understand the policy conditions. They don't know whether they're covered for flood. They don't know whether the insurer's gone deep at storm. It's a real mess. So having a broker handle claims is really where we add value, because the insurers could be trying to squeeze out of paying something minor and we're not having that. It could be grey. They decided not to pay. Well, if it's grey, pay it. I know Allianz did a survey about 3 or 4 years ago of the claims in their direct market versus their broker market for open contents, and the average claims payment or greater achievement getting paid through a broker is about 18% more. So that's a big difference if you're dealing direct and you get a letter in the mail saying the claim's been denied, whereas if you get it through a broker, it comes straight from us and when we look at it, we'll go, well, no, the first thing we do is try to find a way to pay it. So a lot of them at the moment, because some of the partners just the service levels are off, and mainly we're here to say to you, well, we're here to fight for you. So yeah, and that could be home and contents, business, car, professional identity, workers' comp, anything. So it's really becoming advocacy for claims and being there for the client is the big thing at the moment. So. This is probably better for commercial clients, but we have seen a real shift in insurance towards risk management, especially in terms of high hazard industries. So knowing a good risk management program is going to enable you to have greater exposure to insurers. If the risk has been surveyed and it checks out really well, then we're able to generate more favourable terms. That could be, for example, a lower fire excess or a lower liability excess for slip and falls, or greater capacity insurers can offer. If the risk comes up really well, they may say instead of offering 50% line, they might say, okay, we can do 80. So we only have to fill the remaining 20. So it really depends on how the survey comes up. The risk surveys can also help you make your workplace safer. So you can incorporate them into any training materials. They can identify hazards. A lot of them will identify, the fire extinguishers might be not being serviced or the fire doors need servicing or something like that. So, and then it sets a cornerstone for your minimum professional approach. If you have a workers' comp claim or if there's a liability claim, those documents can really come in handy and show that you're running an organisation really well, and it could be just an accident. So we really have been pushing risk management over the last couple of years, but now it's really starting to take off. So we've got access to surveyors that will go and meet with a client and sit down with them and run a survey for a client in Sydney, and the report was 152 pages, which is unbelievable in detail. That's going to really help us with their marketing as well. The growing uninsured risks, it's not just fire and liability. We've seen big increases in cyber. Obviously, that's front of mind. I think with the media reports going on. Management liability, so cover for the directors and officers of the entity, and trade credits. So this is probably something opportune to discuss, especially the issues in the construction industry. So trade credit insurance basically will provide cover for 80 to 85% of your debtors ledger in case the client defaults or goes under. So the insurer will you pay a premium up front for the amount you need to insure, and if the worst comes to worst, then the insurer will help you pay that outstanding debt, and if they can, they'll try and recover that off the third party. Obviously, if someone goes belly up, that's obviously going to be difficult. But another construction company went under yesterday in Queensland. I think it was. So it's 4 in 4 weeks. Yeah, so that's really one area that's really cyber. We've had a number of clients locally and around the country. Big one at the moment is ransomware, malware, just emails popping up that look legit, even in PDF form, starting to send them properly in PDFs. We get a lot of our insurers send us monthly statements on PDF. Some of them I have to forward onto IT, just, can you have a look at this?
With the building, sorry, was it 4 building companies have gone under in 4 weeks?
4 developers.
4 developers.
Yeah.
Commercial or residential?
Content was residential.
Content was residential.
Yeah.
They're large scale, so they're not just doing 3 or 4 years.
And all out of a major city.
Yeah, but
Pro build was Melbourne.
Pro build was good, but you had something here in regards to what happened at that sportsman. So the developer goes under, yes, a lot of traders, trainings, reviews, $50,000 contract, $100,000 contract, and that's it. So,
I just become an unsecured creditor.
Isn't it fascinating though that you've got property boom and there's all this development going on regionally?
So what they're saying is there's the supply chain of the country, and then the margins are so low because a lot of them don't have clauses in the contract that are able to fluctuate prices. So the prices are set from the get-go. So when the cost of everything's gone up, they're like, well, okay, their margin reduced, so they're not paying their subbies. Next thing you know, they're not paying the super, and it's really just start a store. So we do have access to another specialist trade credit insurance. It is very special. So that's something we can really push for to see if they need some help. It's not something that's very specialised. So similar to aviation or works, we've got agencies and
just on that side one, say no, cyber is not the top time they buy, but actually just put it in, wait for 2 weeks. There's 2 things that are said to cyber. One is people with their businesses, they come under a cyber attack. They're very frightened to tell people about it. One is because if you're a solicitor or an accountant or a real estate agent or any type of professional and you're hit by a cyber attack, if people know about that, they're not going to use you. They think they're unsafe. So we're finding that a lot. The other thing is in regards to cyber is that the important thing is that they bring a triage line straight away. And the company's actually had 5 or 6 departments that concentrate on shutting everything down. So if you wait 3 or 4 days, your damage is done, and you've actually got more damage done down the track. If you ring an IT company, you're going to make the damage even further because they'll end up deleting things that their cyber insurance company can't actually trace back. So if you do have cyber insurance with the broker, make sure you've got all the emergency contact numbers, because if you happen at 2 o'clock on Sunday morning, the broker isn't going to be able to help you. It's good to let them know because they can help you on other things, but you need to have that emergency number and they activate things straight away. So just be wary of that. It's just that a lot of people don't like talking about it because you have a business, you get cyber attacked, but they're not going to use them because they're not safe.
I don't mind sharing a PRD experience. Wasn't ours per se, it was one of the other offices in our network, but cyber insurance and cyber crime obviously became pretty big, as Matt mentioned, for real estate. There was an agency, so it's the transfer of large volumes of money out of our trust account to obviously the recipient that was being intercepted. So trust funds, balance of deposits, all that kind of stuff was being intercepted by cyber crime.
And that's a major loss. Yeah, that's the main problem you're going to have is if it's just a simple, what you think is just a simple breach. It's not a simple breach.
No,
It's actually a legal requirement now, anything under 300,000, isn't it, to report to government?
3 mil if you're shooting over.
And
But you've still got to notify your clients. I mean, it's just,
And to have to backtrack the sort of funds that we were transacting, that office was transacting was a nightmare.
And I mentioned the banks are too keen to help, they just don't want. So
and it's not just your computers too, we got hacked maybe 8 years ago, and they got into our phone lines, and somehow they were able to make from the Friday afternoon until Monday morning when we got to the office. I think they made 1,500 international phone calls through our
network.
line.
Wow. Wow. Yeah.
So that was a pretty bill.
We're even seeing farming companies with the technology that they use for farming. There's an abattoir that got hacked,
JBS got
getting them very happy with the technology that they're using. So it's very important.
Technology is good when it works.
Yeah.
On the topic of that, sorry, I know we've got a progress report, but on the cyber insurance, so how much of that, from your perspective, do you need to educate the client about? Like, do you know how to boot somebody out of your systems? I've also had an experience where many years ago my system got hacked, but I've been trained on how to boot everybody out of my environment before I had to go for an insurance claim. So is that something that?
No, the key is to make sure one that you have covers in place. Two, that it's with the company that has emergency triage systems that are operational straight away. As a break, we follow that roll up of the cyber, but a lot of the work on the cyber claim is done in the first 24 hours. Everything else can follow after that.
And it's important that the cover's right, because some of you've really got to have worldwide cover. Some of the insurers are starting to cut back on certain countries. Political reasons. Because they're seeing a big influx of claims. A lot of the insurers will exclude jurisdictional cover out of the USA and Canada, because if there are claims coming out of there, if you lose your client's data, the penalties are massive. So it's important that you look at the worldwide territorial cover and worldwide jurisdictional. That way, you know you're comfortable that if you get a call at 2 o'clock in the morning on a Sunday morning and ransom in Bitcoin, and it's anywhere that you're not going to pay it, obviously, don't pay. You bring them to triage and they will run it through from there. So, danger of over insurance. We see this market value versus replacement value. Given the seen a big increase in the used car market values, big increase in plant equipment, because the lead time out of countries is massive, like 2.5 years. They're talking about for a truck out of state. We see a lot of clients buy, especially plant equipment, with many equipment trucks at auctions, might be raised online or pickles, where they could be a bankrupt estate. So the bank's just looking for their money to clear the debt. The client pays $100,000 for an excavator, or it's actually replacement pays $250,000. So if they write that excavator off, they'll probably get 60, especially for financing. So it's really important we say to clients, submit an invoice from an auction through saying, oh, I can actually check what it's worth. Like, oh, I didn't think about that. Yeah, well, that's, you know, it could be underinsured. So, and that's, the insurers are really starting to crack down on co-insurance, which is what they call underinsurance penalty. So to save premium, originally a lot of people were deliberately underinsured to save money up front. However, come claim time, if it was a total loss or even a partial loss, they only get part of their claim paid. So we have calculators and all sorts of information available to us to help you understand underinsurance and how it will be applied in a claim. Partial loss, not total can cripple business. If you think we've had clients suffer storm losses or fire losses where the premises can't be occupied because of obvious reasons, they need to then go and try and find alternative premises to rent. They might have one piece of machinery that's their key piece of machinery that might have a 2 or 3 year lead time. There might be a spare one floating around in Europe somewhere. Rather than shipping it, the insurer decides, you know, take out cover to e-freighter, which might be 50 grand. To get anything to get the business back up and running, you might need to outsource business to other suppliers to keep your customers going. So, yeah, the total loss, the client can just say, you know what, I'm closing the business. I want a cash settlement. Partial loss can be more expensive and more time consuming. So it's not just, it could be getting plans through council to get half the building rebuilt, but it could be 20 years old, so they've got to design it to current code. The extra cost of reinstatement could be another 100 grand. You've got to put a ramp in, you've got to put disabled toilets in, you've got to put different fire security in. So all of a sudden, a 12-month indemnity period is up, and that's it. So 2 years is really the minimum now we're seeing, because things are just taking so long.
The other key to the market versus replacement value, since COVID's hit and spreading the storm the building market, is that the materials just aren't there. We heard the other day that there's too much plumbers in Australia that actually buy up all the PVC. So a lot of these, you have commercial building that has a partial loss, or investment property has a partial loss. The ability to get it rebuilt in 12 months is wrong, because that actually won't happen. You'll just have 2 years. Then they look at your insurance contract to say, can I get loss of rent cover or business interruption cover for 24 months? Yeah. And the other thing is that the replacement values are actually going up because the cost of materials are gone. Now people might say, oh yeah, but that building's worth 700,000 because the real estate agent told me that's what you pay for. That's what you pay for as a whole in a marketplace. But in regards to having it to be replaced by builders, it's going to probably be a lot more. Sometimes you'll be surprised and it's actually a lot less saving insurance, but the best thing you have to do is to go and get a replacement
Valuation, reinstated valuation. So
which
if
you get for about $660.
If someone insured 700,000 and then there's a total loss in the building, it's valued at 1.5, you're probably getting 450,000 for it. So it's really starting to cause some issues. And again, business interruption, there's insurable gross profit is not an accounting gross profit. There's a lot of figures that go into calculating the insurable gross profit with factoring purchases, opening, closing stock, other expenses. So it's important to come and talk to someone who actually has a sit down and work it out properly with a calculator, because there's a lot of working parts that go into it. Questions?
Would you say most people, or there's a lot of people out there in business that are completely uninsured or incorrectly insured?
Yeah.
And what's the best thing to do? Is it ring their broker, ring you guys and have a chat? What should people do?
We've seen a big push. A lot of the direct insurers launching business pack products online. Well, not worth paying the bill because they don't give the client, you know, it's basically a chatbot. They don't understand policy wordings. The policy wordings are supposed to be easy to read. They're pushing 70 pages plus different sections, so they're not easy to read. And there's technical details in them, and you know, some client might think, okay, well, claims preparation costs under the business interruption section. That's costs the insurer will pay a report for it. You know, for instance, we can have someone help manage the claim. 10,000, some of them are 10 grand. It's got to be probably 50 more. Increased cost of working, so that's cost to help the business get back up and running if there's a loss. Some clients got 50, and they might be needing 250. So it's really having a look through what they've currently got and saying, well, that's not even enough, or more to the point, that's not insured.
Yeah.
So yeah, it's really just sitting down and going through them and also checking.
What about is people probably don't understand what their insurance policy has in it until it's too late. Like the number of people unfortunately probably suffered floods, if you're in an area that's
Yep.
not highly prone to floods, you probably that'd be the last thing you think. about
And
having
if you look at,
insurance.
the New South Wales floods, casino flood. So a lot of people wouldn't worry about flood coming because it was not on the radar.
No.
And if you look at the bushfires, the cost to reinstate them went up immediately because the bail levy, which is it's basically proximity to embers.
Yeah.
So if closer you are bushfire exposure with embers, the cost of reinstatement goes up. So after Black Saturday, when insurers were just going out writing checks to get the claims paid, $350,000 house to rebuild in that area might now be $700. But then it could be more now because the cost of getting materials in.
Yeah.
So it's a real issue. And there's going to be parts of the country, it's happening in California at the moment, there's parts of Northern California where people just have getting fire cover, they can't get it because of all the fires. So the insurers are sending out their renewals and they're saying, look,
So they're not going to get covered for fire because it's such a
No.
prime area.
the 2019-20 season, I think it was the Camp Fire claim, was the largest cat loss of the year of 21 billion US. So, and that whole fire season was about 75. So it's, if you look at what's happening up north here, we're pushing easily 4 or 5. So massive.
This is a sort of specific one, but if you lease office space in a building,
Yep.
so you've got your office space, but there's other businesses that lease different office space, the common areas, like say the hallway or the stairs, who's responsible there for the insurance, I guess, there to cover, say, someone coming to?
If it's a strata, it'll fall under the unit, the owners corporation.
No, the building's owned by one.
Yep.
Commercial.
Personal.
The property owner will have insurance. So,
So if someone's coming to my office that I lease and they fall, like slip on the floor in the hallway or fall up the stairs or something like that, whose insurance covers it?
yeah, the trigger on liability is negligence, but if basically you see that where a lot of clients go, oh, I'm worried about this and that, but if the client, if they just fall over, well, there's no sort of fall, but if there was poor flooring or the stair wasn't marked properly or there was not enough that non-slip material, then that would fall under the property owner's policy.
The key is not that anyone that has any involvement in that building dragged in any type of litigation.
Yeah.
And then they clear out pretty quick who's responsible.
Yeah.
in regards to that. So you might get a letter from the solicitor, so that you might be held responsible, then they might deem that the property owner is responsible. With a bad carpet or.
The insurance will sort that out. If I came into your office and tripped over and the carpet wasn't properly labelled, workers' comp would probably come knocking about 6 months later. But then you just pay that to your insurer in all respect this. So
Yeah, it's just that common space, because I know one of the other business people and I actually contributed to have the carpet replaced in the hallway with essentially minor.
Yeah.
Because the property owner wouldn't, sorry? Because the property owner wouldn't, and it was revolting, and we want people to have a good experience coming to our.
We have one on common property, an older lady who came to see a surgical fall over on something and pavement. But again, that was on the properties.
Yeah.
So, yeah.
So I asked because someone asked me, what if someone slipped coming to your thing?
make sure you've got insurance. I know you do, so do it.
I've got all the insurance.
Anyone else?
Okay.
Thanks, Nick. So it sounds like if you don't know what's in your policy, and if it's huge, you won't. You need to have a chat to your broker or reach out to HIB and have a consultation with the guys there. Thanks, Nick.
Thank you.
And I would like to invite Glenys Atkins from Audit Trust to talk specifically, you have redeemed myself, about the Big 500 program. Thank you.
I'm a very different speaker from the other two. So I'm from Audit Trust, the Community Foundation for Albury-Wodonga region, and I am talking specifically about the 500. I've given you all a little pamphlet, and many of you in the room know it. So firstly, Albury Business Connect are our business partners for Give 500, which is really fantastic and helped us launch it last year. Give 500 encourages donors to donate $500. It's pulled together. It's called a collective giving campaign. It's pulled together. The funds that it raises support an important local community initiative. And the thing about Give 500 is that it's donor run. So we go through a process, we raise the money, we call for expressions of interest from community organisations to apply for the funds. We create a donor committee. Kate and Renee were on our committee last year, which was really brilliant. We go through the expressions of interest. We shortlist it to 3, and they're invited to our pitch night. Our pitch night was held in November last year. And then the donors come to the pitch night and they get 1 vote. Every $500 is 1 vote. And you can see, if you have a look at this later, our story so far, our 3 that we had last year were junction support services for the therapy dog program, Survivors of Suicide and Friends for Solstice, the documentary, and Aspect Riverina School for Resilience on the Spectrum. So 3 really, really worthwhile causes, local causes. Donors made the decisions. It was a hard decision. Therapy dog won by 1 point. But then donors in the room at the end of that came together and said, we want to make sure that these other 2 are also funded, because everybody really connected to them. So I'm just encouraging you, if you want to give local, if you want to know a little bit more about the need that exists and housing and, you know, those things on the flip side are really important local issues. Please spread the word. If we can come and talk to your workplace, donors have 1 vote, but actually we found that businesses bought 1 vote. They donated 500 and they bought their team of 3 or 4 people. And so at the pitch night, they saw the videos, they met the people, heard their last pitch, and then as a group, they had to decide where their 1 vote was going to go. So it was a really good team building thing. We did it with my family. It's really lovely to be able to kind of connect with your family, your colleagues, make that 1 vote and be part of a decision. We have donor gatherings too throughout the year, because it's about trying to build networks as well. And it's a collective giving movement. So organically, we want donors to tell others to come on board. The more donors we have, obviously, the bigger impact we make. That's it. Thank you.
Actually got goosebumps then just talking about the pitch night last year. It's such a powerful experience being in that room, seeing what amazing initiatives are going on in the community, and then to have impact on where the money goes, I think is great. So thanks for all the hard work you're doing in that space. I'd like to now quickly invite Tanisha up, because that wraps everything up, and she's going to have a quick chat through of a couple of upcoming events. And then you can all linger around, have a cup of tea or coffee, or if you need to rush off to work, we understand. So we'll draw, you do your events, and then we'll draw the winner of the Lucky Door Prize.
Thank you all for coming to Business Before Hours for April. We do have 2 more events coming up this month. First one being Business Before Hours on the 27th of Business After Hours. Thank you. Business After Hours on the 27th of April. This is going to be hosted by Ray White, Albury Central. It's a bit of a grand opening for them, and to give them the preview of their space. It's new in Townsend Street if you haven't seen it already. The next one is YBE. That is on the next night, the 28th of April. That is going to be held at Church Street Hotel in Wodonga. It's a meet and mingle, so a chance for young, like-minded professionals to meet, have a drink, have some dinner and catch up. So make sure you register at Albury Business. I did have a slide, it's not on, alburybusinessconnect.com.au, and we'll see you there at these events. Thanks, Tanisha.
Well, that's a really good opportunity for your employees and things to go and meet others and network. So we encourage you to invite your team along to that. So we've got a Lucky Door Prize donated by the PRD team. What have we got, Kate?
We are giving you a bottle of Joyride, which is Alex Berry's fine red wine.
Tanisha Smith.
Transition.
Well done.
It gets-
There we go. Thanks for coming. Thank you.
Oh, all right.
Just put it away.
So-
Yeah, need it.
Thanks very much.
Right, here's your coffee.
Yeah.